All right, guys, good afternoon. Welcome aboard to the aftermarket recap. It is about a minute before 5 p.m. Eastern Standard Time, January 21, 2022. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thank you so much for joining me today and every afternoon at 5 p.m. Eastern Standard Time. All right, let's go ahead and talk about it. The market fell 450 points on the Dow. It did bounce earlier in the day and then fell. As we had OPEX today, the Nasdaq fell 2.72%, the S&P down 1.89%. The VIX closed just a smidge under 30, up 12.74%. Equal weight ETF down 1.46%. SPY down 1.96%. Small caps down 1.87% at 196.99. Filled the gap to the downside at 197. The dollar index down 0.10%, 95.63. Yields fell 1.747%. Gold also fell as well. Let's take a look at the futures on gold. Down 0.37% at 18.35. 24.34 for silver futures per ounce. 24.44 on gasoline futures. That's down about 1%. Crude oil fell as well, 84.81 a barrel, 0.86%. And then we have the credit markets. High yield credit was green, 85.44. Investment grade credit bounced 0.66%, 120.90. So again, bonds were bid today as yields did fall. And looking at crypto, oh boy, if you're looking at your crypto portfolio, take a look. Crypto futures, Ethereum, 18% to the downside, 26.10. Bitcoin futures, 14% to the downside, 36,790, 725. We are now at 36,889 on the spot. Let me get my crypto portfolio just to give you a heads up on where I am. At my peak of this portfolio, I believe it was right around 245,000. I'm at 134,026. So again, imagine that's a big difference. It's a big dip. Does it matter to me what happens today? Not really. So again, at the lowest point I've had my crypto was right around 97,000. So again, I'm a long-term investor. I'm not worried about crypto at all. I know what I got into. You can see Graph, Tezos, Stellar, Shiba. Well, Shiba I took from profit before. Sushi. Those are all still red. Polygon, I'm still green. Ethereum, still green. Bitcoin, I'm still green. Luna, I'm still green. Ripple, I'm still green, which I can't even sell Ripple. But either way, or buy anymore. But that's where I'm at in terms of crypto. So again, nothing's really changed. I bought some Matic yesterday, bought some XTZ yesterday, bought some XLM yesterday, and bought some Bitcoin 2 days ago. Again, $50 a week, 25 bucks a week, very small amounts. I don't go nuts there. Again, my thing is consistency over time. I'm not worried about crypto today or tomorrow, to be honest with you, because I really don't need that money. So again, that's how I always think in terms of investing is that, hey, do I need the money within 5 years? If that's the case, then no, I'm not touching it. I'm not going to invest it. I'll keep that in the emergency fund or cash savings. Totally fine. So what happened today in the market? Let's take a look at some technicals. We finally broke down below the 200. That was a big level. Now we're at 43.81. We are technically on the S&P 43.28 being the correction. So we're not quite there yet, but pretty close. But 4,400 was my level that I said personally that I would be buying some stocks, and I did. I bought some Microsoft today. I bought some AMD today. I bought some Apple today on my IRA, and I bought some more Amazon today. So again, I don't have to rush it to the door and start buying everything. Again, I have a systematic thing how I do things. So again, I'll buy in blocks how I want to buy. If it slings a little lower, I'll keep doing that. That's what I did in 2020. I didn't just go all in right off the rip. I think a lot of people are trying to rush to do stuff, but investing, again, it doesn't work that way. You just take your time. Again, I'm focusing on just on the core holdings. Again, the Googles of the world, the Amazons, the Apples, the JPMs. Well, it's not a core holding. The AMDs, the Nvidias, those names that I want long term. That's the ones I'm focused on. I'm not focused on high beta. Again, Palantir below 10 would be great. I'd buy some more. But other than that, I'm not really rushing to go ahead and, oh, let me just buy 10 grand worth of Apple or 20 grand worth of Amazon or 10 grand worth of Tesla. That's not what I do. Again, I buy blocks. So again, for example, I bought 10 shares of Microsoft. I bought about 35 shares of Apple for my IRA. I bought 25 more shares of AMD, and I bought 2 more shares of Amazon. Now, again, it would be nice if they did a stock split, sure, but I mean, it's still the same at the end of the day. So again, at that point, again, I'm still looking to buy some more. Again, do you have some more weakness on E-mini futures on S&P? Absolutely, you can get some more weakness pretty much right around 4,300, 42.93 is the October lows. Now we could tap that and then see where we go from there. But the 200-day has not been broken, guys, since COVID. Literally since the throes of COVID, which was right around June. So all we did was break that down. Now again, can we go lower? Sure. But I still think, personally, that was a big psychological number. I think we're still shaking out a lot of people. This was a complete liquidation. Bonds were being bought, at least. But again, at the end of the day, some names did well. We'll take a look at the S&P map. In terms of options, I had some IWM puts yesterday that I held, and I made like 90% on it, but I moved on. So I bought some calls playing the bounce towards the end of the day. Didn't work out, but I'm still holding on them. The premiums are holding up okay. Let's take a look at the heat map. You can see a sea of red. But again, Amazon Microsoft down about 1.85%, Apple down about 1.28%. Not the end of the world. But look what held up. Remember, utilities tend to hold up. The defensives tend to hold up. Some of the cyclicals did okay. Some of the semiconductors, other than Nvidia and AMD, went down, which are my two biggest holdings in the semis. Qualcomm was down about 1%. That's one of my top 10 of 2022. So look, you see, Disney was down. Netflix was down as much as 25. It bounced slightly. Amazon taking a big rip. Tesla taking a big rip. So again, this is where you start working on your shopping list. Again, there's one thing that I know that I've seen is that opportunities don't really happen that often. 2020 was an opportunity for me, and I took advantage of it. I think this is an opportunity for myself. Now, I can't make that decision for you. At the end of the day, I can only tell you what I'm doing, and that's what I did. I am buying, so I'm a buyer at these levels. Taking a look at NASDAQ, let's see how far more we can possibly go. You could see 14.3. That will be right below the October lows on the NASDAQ futures. Again, that'll be another marker for me. Again, guys, the market's not going to go to zero. We've seen this before. 2018, we had a nice drawdown. You had the 2020 drawdown. That happens. We're in 2021, we didn't have a correction. But I did say 2022, guys, we're going to have a correction. I said it. And then the faster we get over it, the faster we can move on. You're not going to go cut, and you're not going to be a 50% decline in 2022. I bet any amount of money that's not going to happen. It just won't. So again, what you're getting is systematic selling, a washout, again, rate hikes, name whatever excuse you want. But again, if you are a long-term investor and you have your plan, you have your cash set, and you have your emergency fund, you know what you're looking for, this is not bothering you whatsoever. If you're going through a week, let's say a 3-year period, you could see, really, is that really to the point where the world has ended? I don't believe that, in my opinion. But everyone's different. If we go ahead and go back to 2018, where we were when we had the dip, right here was right around on the NASDAQ, the low point 57.66. Wouldn't be bad if you sold there, obviously, or right about 66.28. You're still more than double that from the COVID lows. So I get the idea where everyone sees red and they panic. I get that. That's really what hurts investors, is the emotion side. And I understand. What I have seen a lot of, and it's not smart, is that everyone piled into the high betas. Again, the Airbnbs, the Pelotons, the GameStops, those names, the AMCs. They piled into a lot of speculative stuff. And again, I have speculative stuff too, but it's not a majority of my portfolio. But a lot of people, they just went on that and they chased the gains. That's not the best. But then they want to sit back when the market is giving you a discount. I mean, what can you do? That's just how people are. And it makes a lot of sense. So again, bad day, red day, absolutely. Everyone's taking a hit. I totally understand. But again, I'm looking for opportunity personally. That's me. If you think stocks are going to go to zero, I think I've repeated myself this many times. If you think stocks are going to go to zero, the market is over. Whatever money you do have in your wallet is probably going to be meaningless anyways. So again, if you think the world is ending today, okay, sell your stocks by all means. If you need the money, sell your stocks. I don't. So again, I'm chilling. Again, I'm looking for opportunity. Now, in terms of crypto, let's take a look at crypto here. This is a daily chart of Bitcoin. If we can start breaking below 30,000, maybe it gets a little interesting. I wouldn't buy a full coin, but Ethereum, yeah, maybe I'll start adding some more Ethereum. That's the two I want to focus on. Not really the alts, more of Ethereum and Bitcoin is what I want to focus on. So maybe I can get around 2303, 2400. That'd be okay. Want to see how the market goes in terms of crypto. But again, crypto has been a leading indicator. I've been saying that. If they fall, a lot of the risk assets fall. And if they bounce, a lot of risk assets bounce. So again, what you get is a complete liquidation, just trying to stack cash, sell. A lot of, you also have a lot of levered traders who trade on leverage. Not smart if you don't know what you're doing, obviously. But again, let's say you had 10x leverage on Ethereum, you pretty much were wiped out depending on where you bought. If you had 5x leverage on Bitcoin, for example, and you didn't know what you were doing, you're pretty much wiped out. Or if you did that with stocks, you probably had a margin call, for example. But again, if you're just a person that has a retirement today, that has a 401k, an IRA. I added to my IRA today on Apple. That's the only stock I have in that. That's how much I love that company. In that sense, again, you're not going to retire tomorrow. Again, your retirement is around 65, 66, or 67 years old in an IRA. So granted, I don't know if you're 67 or 66 watching this, but more likely you're not really worried about it at the end of the day. But it gives you that little anxiety. I understand that seeing that red, the last thing you want to do is lose at anything or lose money. Completely understand. No one likes to lose. Of course not. But you got to give yourself some context. Again, at the end of the day, all we have done right here is have a correction, a 10% correction. If this is to the point of scaring you, and then you shouldn't be invested in any single stocks. You should just be in an index fund. Like I've always said, an index fund is like putting in an autopilot. At worst, you're down 10% today, at 9%, depending on which ETF you bought. Now, again, is that really the end of the world? Picture you had 100,000 in an index fund, you'd be down 10,000. Would that be, you'd be at 90,000 balance. Would that really kill you? Well, it depends. If that's money for your house that you're trying to buy, that's why I always say, if you have a big purchase, do not put it in stocks. Hold on to it. Let's say you're going to put your down payment on a home. Do not put that in stocks, guys. Be smart. You understand? So again, always ask yourself, do I need the money within 5 years? If your answer is yes, do not invest that money. If your answer is no, then that's fine. Then you can go ahead and invest if you like, because you've already understood that I do not need this within the next 60 months. So these moves that happen, again, you're always going to get ups and downs. You're going to get bounces. You're going to get sharp falls. You're going to get moving averages, breaks up and down. So unless you're literally trading, which we do, then that's a different story. But as an investor, is it really time to worry? No, I think we're pretty much to the point of really high pessimism. And again, we had an expiration date today. So again, you had more volatility. We have the Fed next week on Wednesday. Let's see what they say. We also have earnings next week. Let's see what happens there. We have GDP coming out. Let's see what happens there. So next week is going to be huge. It's not a short week. This week was a short week, only 4 days. So again, we still have a lot to go. And again, I am still confident that at the end of the year, the markets will end up green. And it's still my point of 5,100 S&P. It may sound crazy now, but again, take a look at YouTube, March 2020, when I started saying at 2,300, yeah, I was buying stocks. Now again, I could be wrong, sure, I could be wrong, but I am confident at what the levels I'm looking at. I wouldn't put my money, I wouldn't want to lose money, obviously. I'm not going to put it there just to massage my ego. I don't care about that. But again, these are opportunities. When you see fear out there, just like Warren Buffett says, be greedy when people are fearful. We're getting to that point of fear. So again, if you start seeing regular people that don't follow this stuff asking you, oh, is the market going to tank? Ding! That's where you're getting in. When you have regular people saying, the markets are going up, man, I should start investing, and they don't know anything they're talking about, ding, that should be a little bit okay, we're going to get a little rocky road here. So again, that's how I see things in terms of the market. You have to kind of listen for the little signals. But today, was it bad? Yeah, it was bad. But is the world ended? No. There's still another tomorrow. The sun will rise, and then we'll go back to it on Monday. So let's see the questions. Saif is asking, I'm trying to comprehend as what is really happening. Good question. 10-year feels fall, market continues to fall. Can you explain what is really happening? What is really happening is that you have a lot of people, a lot of traders that are over leveraged, meaning they borrowed money to buy stock, a little bit of a mania, going up, up, and up. What happens is that if you buy on margin, you have to have cash to keep that borrowed money or that borrowed stock at a certain price. Yes, the yields tell you something, but it doesn't tell you the whole story. So yields were down, it makes it cheaper to borrow, hence why bonds were up, the high yield and investment grade. But that doesn't tell you everything at the end of the day. Sure, you have some bond buying today in the 10-year, that's why yields were falling, but that's not the only reason. And not only that, today was options expiry. So a lot of futures contracts expired today. Options contracts expired today. You get volatility. That's what happens. That's what happened today for the most part. Again, no real news other than the Ukraine-Russia thing, but I don't think that's a big enough issue to cause a market-wide sell-off the way it is. There really wasn't a place to hide if you're an investor other than possibly consumer defensives and maybe bonds. But again, we haven't had this kind of move in the NASDAQ this quickly since the financial crisis, since COVID, since the dot-com bubble. That's 3 instances in the past 22 years that's happened. So what's more likely to happen again? We continue to fall? Are we in a crisis? Not that I know of. Earnings were fine, not like they were horrific. Rates haven't even been hiked yet. So it seems to me that we're getting too ahead of ourselves. If you're here to tell me on YouTube that a 25 basis rate hike 4 times or 5 times in a year, that's 1.25%, cost the market 10%, I wouldn't believe it, to be honest with you. I'd be like, okay, so what if we hike 20 more times? Are we going to go to 0? No. Again, what you're getting at the end of the day is you're getting a lot of excuses to sell, a lot of people who are over-levered, and now you're starting to see the cracks of that. That's all. Again, there is no lockdown in COVID. Economy is open. That hasn't changed. Unemployment is down. GDP is up. I mean, I don't know. It's not like liquidity has been cut off. Again, you can still borrow money. You can still buy a home. So it's not like we have a lack of liquidity. So what we have is a drop in asset prices, just asset prices across the board. That's all. Isn't that kind of what you wanted to fight in terms of inflation? You wanted prices to fall? Isn't that kind of the same thing? Kind of like that, right? Do you expect a bounce of money or a Monday or just a brutal dump? That's tough to say because you can get headlines all over the weekend. I say that we can hit, if I'm looking at SPY here, there is a gap to fill on SPY, and it's right at 436.10. 436.10 could fill, and then bounce. I think we retest the 200-day. I think we're going to go ahead and bounce. I really do believe so. I think literally the last line of defense for the market, that if this breaks, then you're probably saying to yourself, okay, now it's really ugly. 42.61 on E-mini futures. So let's put that alert there. So I have some numbers here. Here it is. 43.28 is a 10% correction. We're not there yet. 20% correction is 38.47. Not there yet. 37%, that is equal to the COVID drop, the COVID complete drop, top to bottom, 3,030. If that happens, I will eat my hat. I will eat my hat, and I'll probably mortgage my house to buy more stock, to be completely honest. That's where I would be, because that'd be, wow, that would be so out of this world, especially with not a crisis available. If there was some kind of crisis, we got invaded, we were locked down, like a 5th flesh-eating strain of COVID, the Fed said, we're just hiking 10 points tomorrow, something that to that effect, that makes sense. This doesn't have crisis written all over it. This has fear and panic written all over it, which is fine. That's not a bad thing. Not a bad thing. This reminds me of December 28th. It'll be all right soon. I traded during December 2018. It was a mess, but we bounced, and it took time. And it took, I think, about a month to get there. I think we're closer to the bottom than we are to closer to more downside, in my opinion. What is a good ETF you recommend? I recommend SPY-G. That's the one I like. That's just me. Nasdaq is down 15% all times, but we're not even at 10% correction of the Dow. We'll see more red next week. That could be possible. Let's see. How does IBM chart looking? That's one stock I don't own, is IBM. On the daily and IBM, it's just holding on to that fib line here. I need to update my fibs, but right around 129.35. There is a down, that gap was filled. 127.90 is your 100-day, so IBM is not doing too bad. A good entry level for SOXX, that is your ETF for semiconductors. It's coming close to the 200-day, and keep in mind the 200-day has not been broken since when? COVID. So that'll be a nice little buy. I bought some AMD. I want to buy some more NVIDIA, but I'm waiting for that. But again, SOXX is not too bad, right around 466. Hey, Carlos, Ethereum looks juicy. Buying more with your estimated levels. Ethereum, let's take a look at it. Ethereum, this is on Binance, right around 2,300 would be amazing. I remember when it was 1,800. last year. 1800, everyone was really panicking. But 1800 would be a nice little reload test. So I would say 2000 if we keep right in the middle. That's not a bad level. Hey, Carlos, you're waiting for 30K to buy BTC. I am. Well, I buy every week, but 30K would be nice. Sure. I wouldn't buy a full coin, but I put a little amount in there. Sure. Are you bullish in short-term, long-term oil price? $100 a barrel is my target on oil. That's what it's been. We'll get more demand. But once we get to $100 a barrel, that's kind of like that psychological number where the OPEC nations start pumping more, increasing supply, because they need that money to pay for their social services and government. If, for example, Saudi Arabia, Venezuela, Iraq, those sort of companies, those sort of countries need to pay for their social services, their government. And what pays for that is oil. So again, if you have a commodity that you guys drill, for example, your country, and it's $100 a barrel, you're going to try to do as much as you can to sell as much as you can because you want to get that surplus in money. And that's what will bring it down. $100 is a good psychological level. That's when usually people are really pissed off. That's what I want to see. Let's see. Do you recommend buying a leverage ETF? I don't recommend it for more than a year. I think if you do TQQQ, I would hold it for max 1 year, personally. I would just buy it at QQQ. I wouldn't get Q, to be honest, unless it's a trade. Entry level to DraftKings, I still own it. And again, you can see pretty ugly, and that's okay. Again, that's a stock that I want to hold long term. So let's go ahead and take a look here at a 20-year. Really, you're starting to get to levels not seen since 2020, right around 1760. So let's see if we go ahead and get to 1760. Again, I do love DraftKings personally. Again, it's up and down. It's going to be a mess for a little bit. Those high betas are going to be tough. But again, they're not my focus right now. I have a good amount of shares of DraftKings, so I'm willing to buy more if we can break down a little bit. So what do you think about Shop and Amazon? I bought Amazon today. I like Amazon more than Shop. Nothing against Shopify, but Amazon has AWS, the cloud. So I get both. So nothing against Shopify, nothing against them. I just think my money would be better parked on an Amazon, personally. Could you please check CNQ stock? Okay, CNQ, let's see it. CNQ, Canadian Natural Resources. Let me go ahead and bring it up on a regular hourly chart on the daily. I'm assuming this is natural gas or this is oil-based crude, because Canada does a lot of crude. So you can see a nice breakout. If you wanted to buy some more, I think 50 would be decent, maybe 48 if you want to own it. I don't own any Canadian stocks, but again, oil is fine. I own XOP, and I'm still waiting for my level to break $100 a barrel on oil. Why not hold TQQ for more for the year? That's just me, because the expense ratios are a little high on TQQ. So again, that's more of a tradable security, not a long-term investment security. That's kind of how I see it. TQQ is more like trading calls or trading stock. Again, that's a triple leverage. Again, you're just adding more risk for no reason. Yeah, let me go ahead and race the Tour de France with a flat tire. That's what you're telling me. But why don't you just buy regular Qs? That seems a lot easier and less stress. But I know a lot of us want to shoot the moon. We want the best. We want the highest return. Don't we all? But again, I wouldn't add that leverage or risk just because. Unless you're saying, hey, right here's a bottom or near a bottom, I want to hold it for the next year, TQQ is fine, if that's the case. Yeah, you just got to be careful on the leveraged ones. Just they kind of pull you in with the, triple X, leverage, 3X, yeah. Again, I would say if you're just the type of person that just doesn't want the stress, and guys, let me make this clear. Stocks are not worth stressing over. You should never lose sleep over stocks or investments. Investments should be good yesterday as it was last year, as it is today. Every time you buy something, know the fact on why you're buying it, know the level of why you want to sell it, and if it makes you nervous, just sell the fucking thing. It's not worth your stress. It's pretty much a piece of paper, part of a company. That's it. But losing sleep over it, I don't understand that. Again, your life is not dependent on the Dow Jones Industrial Average. It shouldn't be. Again, it doesn't define who you are. Again, it's an investment. And again, if you don't need it and you're retiring at 65, who cares what happens today, January 21? But I do these videos because it makes things in context. Again, there's nothing to fear here. There is no crisis that I see. Unless there's something we got invaded or something like that I don't know about, this is a pure liquidation, cash raising. Let me get this straight. Let's raise cash. That cash is trash. Remember, we're printing all of it and it's worthless. So let's sell stocks that actually beat inflation and that assets beat inflation so I can get more worthless pieces of paper. Okay, that to me doesn't make sense. Remember, The whole stock market is not just people like you and I, retail investors. It's hedge funds who have to beat the market consistently every year so they can make sure that they get those 220 fees, 2% of the portfolio managed, 20% return, cut of the profits. Those guys are on a different level of thinking. They're literally day to day. Us here, we're investors at the end of the day, and we trade. Fine, but we don't own a fund that's public. So why put that pressure on yourself? There's no expiry on your investments. I mean, check in when 2023 and we'll see where we are. How's that? Opinions are RKK ETFs. I want to buy more ARKK, personally. That's just me. I definitely want to buy some more. I did not buy it today, no. It's right at the 200 on the weekly, but there is the breakout level, which is right here. Oh God, I don't know if I'm going to get it, but let's see. 60.77. You can see we had one top and then a double top, and then this was the initial breakout. If you can retest that initial breakout, I think ARKK is absolutely worth buying if you're into innovation and you're patient. The issue is a lot of those funds have expense ratios. Or you can just go down the list of what she owns and buy them yourself in the stocks and make your own ARKK and save yourself the money. That's one way to do it. Thoughts on MTTR? I believe that's a crypto-based, I don't know what Matterport is. This, I don't know what that is. So I'm just going to look at the chart. We're pretty much at weekly support. Let's see, 20. Yeah, you're really at support here. You just hit lows for the past 20 years. I don't know what they do, but if this is something that you want to own, this is pretty much the cheapest you've gotten in about, I don't know, a year. Let me see if I can get the max weekly. Let me see if I can get the max. Yeah, that's the low. This IPO'd in 2021. This is the lowest it's gotten. So again, if you want to buy here, that's up to you. I don't want to buy it, but if you do, I don't know anything about them. So again, that's just something to think about. Oh, the metaverse. Gotcha. Okay, metaverse. Well, for that, I just own Facebook, Nvidia, you know, those names like that. I don't know much what MTTR does in terms of the metaverse. ASML, let's see it. Let's go ahead and bring up the daily. ASML, you got support right. Actually, we broke it. ASML, yeah, ASML is right, broken support. You broke the 20-day. Let's take a look. 200-day. Let's take a look at a 3-year chart on the weekly. Broke the 50. I mean, where can you see it can get a little lower? Maybe around 608. So about $100 more downside if you're just looking at pure technicals, pure charting. So I don't know if they reported earnings yet, ASML. They probably did. But again, if you're looking at pure technicals, right around 605 is maybe when you want to buy the dip. Let's see. Pick of PayPal or Square for 5 years. I think PayPal, obviously. I think PayPal just a little more, but I like Square a little more. PayPal's okay. Don't get me wrong. They're a little more seasoned. They're a little more developed in terms of the company. Square's a little more new. But Square is really pushing Bitcoin more than or crypto more than PayPal is. PayPal is a great payment processor. But again, I think Square just a smidge more. That's just me. But other than that, guys, I mean, listen, ugly day, ugly week, ugly beginning to the month, sure. But you know what? To me, I'd rather knock it out. I'd rather get this out of the way now instead of in September, October, where we have a chance to get back in. And there's one thing I can tell you right now, the Fed is seeing exactly what you're seeing. The White House is seeing exactly what you're seeing. Wall Street is seeing exactly what you're seeing. If you think we have more downside, okay, I can live with that. I don't. I think we're closer to a bottom. We're getting to that point of max pessimism. We're going to get there, and then you'll see a bottom hit. Now, again, can I give you the exact pinpoint on when that is? Well, I'm not a fortune teller. But again, looking at just pure technicals, again, just pure price action, 42.61 is the October lows. Could we break that? Sure. Will we break that? I don't think so. I don't. I think we retest the 200-day, which is right around 44.21. If we get above 4,500, that's another range where we can get back up. So 4,500, watch that very carefully. If we can get there, that's a pretty nice recovery. Here's something else. The VIX. The VIX is starting to hit crucial resistance right around 30 to 31. If that rejects, 4,500 is coming, and then you're going to look back into January and say, man, well, I missed that opportunity. That's what most people do say anyways. A lot of people have told me that, oh, I missed 2020 opportunity. Well, very rare does it happen twice. Do I own Palantir? Absolutely. Love Palantir. I own Palantir. And again, I'm waiting for $10 a share. I'm kind of hoping we get there because I definitely want to load up on Palantir. It's one of my core holdings, one of my favorite companies to own. So there you go. I do like to talk to you guys when a market is red. That's one thing I like. When a market is green, not much to talk about. It was green. Who cares? But when the market is red, it gives perspective. Again, I'm not some uber bull forever. Again, but long term, we do know stocks do go up. Every 20-year period, the S&P has made money 100% of the time. Every 10-year period, the stock market has made money about 90% of the time. So again, the longer you go, when in doubt, zoom out. That's how you look at it. So again, let's say a couple years ago, let's see where we were in the S&P. 2020, how horrific that was. 2018, how horrific that was. So kind of see, and before that, 2018, we had the 2020, that was in 2018. And then before that, 2016. And then before that, right around 2017. So right around every 2 years, if you've kind of noticed, we're getting those kind of corrections. You know, you see here in 2016 twice. You see here in 2016 again, right towards the tail end. That was the election. That was a little more volatility. And then we started soaring. And then we got to around 2018, December 2018 right here. 2019 was pretty much smooth sailing until right around May. We got a little bit of a dip, a couple of dips. Then the big dip, again, that was in COVID 2020. I consider that more of a black swan event than anything else. And then just to the top, right? And then after that, we had a double bottom right in September, right in October, and then we kept going. So you're going to get little blips. So kind of think of it this way. 1 plus 1 plus 1 plus 1 plus 1 plus 1 is 5, right? 5. But that's not how the market works. It goes 1 plus 2 minus 3 plus 1 plus 3 minus 5 plus 1. At the end, it equals 5, right? But again, it just has different integers in a sense. So in a way, every 2 years or so, we didn't have a correction in 2021. It was pretty much kind of smooth sailing. But 2020, we had a nice dip. We had a correction. Obviously, 2022, I said we were going to have a correction. The earlier we get it, the better. So when is the next correction? 2024. That's more likely going to be based on seasonality. Is it an ugly month? Yes. Does it mean the world's over? No. It just means that, hey, it's not as easy as it once was. In 2021. 2021, guys, was a very nice year. A lot easier. 2020, after COVID, yes, when you print a lot of money, makes it a lot easier to have investments. But again, now you're seeing that it's not easy. It's not. It takes a lot of stones. It takes a lot of courage of your convictions to own companies when they're going against you. But all this is removed if you have the right plan. If you have your emergency fund, if you have your index fund, meaning your foundation is index funds, not Palantir, not GME, not AMC, not Peloton, not Zoom. Good ETFs, good S&P funds, VOO. If that's your foundation, you're not sweating anything today. If your foundation is core holdings, Apple, Berkshire Hathaway, JP Morgan, Goldman Sachs, United Health, Procter & Gamble, Costco, good companies with balance sheets, you're not worried today. But the people that are freaking out are the ones who went all in on the riskiest stuff. Think of the Big Short, the triple Bs and the triple Cs mortgages. Why? Because we are always drawn to the highest returns. This is why people play the lotto every single week, right? They see the Mega Millions, they see the Powerball. I can win 300 million, I can win 350 million. But yet, they don't want to wait. They're willing to risk that. But the stock market, we know it's volatile. Keep in mind, always remember the integers. 1 plus 1 plus 1 plus 1 plus 1 is 5. That's what everyone wants the stock market to be. It's 1 minus 4 plus 3 minus 2 plus 1 plus 1. That equals 5. That's what happens. So again, not as a sense of hope, but in a sense of rationale. Let me ask you this today to give you some rationale. What crisis do we have today that is equal to COVID lockdown, Great Financial Crisis in 2008, dot-com bubble, and 9/11? Any of those things have happened today? No. Any of those things happened in the last 2 months? No. So this is just a technical correction where people are just getting wiped, wipe them all out, the people who are doing leverage, and then you'll have the people that are long-term investors. And of course, the people who are wealthy or that are looking forward thinking are probably going to buy the dip more than likely. The problem is that every dip we had, everyone started buying. And I've said this many times, not every dip is equal, or not every dip is created equal. So don't buy every single 1% dip you get. Find a level that makes sense technically. Make sure it's stocks that you want to own and own long term, and you understand what the hell they do. If you tell me some XYZ company and you have no idea what they do, sell it. But stick with the names that you know, the companies that you do business with. If you own Starbucks today, you ain't freaking out. You're probably still drinking their coffee. If you own Apple today, are you freaking out? Probably not. You still have an iPhone. That's how you should play it moving forward. Understand why you're getting into something, understand why you're holding, understand your levels, and understand that tomorrow is another day and you're not retiring tomorrow. Unless you are, then forget what I'm saying. If that's the case, you're pretty much more in bonds than anything else. Hopefully that makes a lot of sense, guys. This was a very important video. And when it goes red, it makes it very, very important because it's important to provide context. I'm pretty sure if you watch CNBC today, you'll see the little scrolling thing at the bottom, markets in turmoil. But what they don't say is corrections happen every 1 to 2 years. But that doesn't sell ads, guys. It's going to be okay, does not sell ads. This is how markets work, does not sell ads. We're at a 10% correction, and this has happened every 2 years, does not sell ads. Companies are still making money, does not sell ads. But what sells ads is marketing turmoil, we're fucked, you're going to lose all your money, oh my God, the world's ending. That'll get you glued to the TV. That I promise. Watch the mainstream media and they'll scare you with every little thing because when you're scared, you consume and you buy stuff. Think about how we sell things. Buy the Colgate, buy the pimple cream so you don't have pimples, not girls won't talk to you. If you don't have this car, you're nobody. If you don't have these clothes, people are not going to think you're stylish. If you don't brush your teeth with Colgate, your teeth are going to be yellow. It's all about fear to keep you consumed. That's what it is. Now, forget just COVID or whatever you want to talk about. But again, the idea is any kind of outlet does two things. Let's say something to get you emotional. Anger, resentment, fear, envy. Those four will get you watching. And they get paid based on how many viewers they have. Simple as that. So again, I apologize that CNBC, Fox Business, Bloomberg is not going to give you the tail of the tape, the real tail of the tape that yes, corrections happen. Yes, this is technical. No, we're not in a crisis. But no, they're just going to throw markets in turmoil in your face and you're going to watch it because, well, big red letters always work. Why do you think newspapers, when it comes to big headlines, they put them in the big 12-inch font? You know, they're not going to put, they're not going to put good news in the front page. Never. It doesn't work like that. I wish we were in a different era where we had good news like that always in front, but what can you do? At the end of the day, it's all about context. It's about understanding why things happen the way they do. And I always say this, guys, the market is like a game. It's like a competition. But if you understand the rules and why things work, it makes things easier. If you play Monopoly and you don't know what the hell you're doing, you're going to lose. You'd be like, I don't know what I'm doing. What's free parking? What's Baltic Avenue? But if you read the rules and understand how things work, Monopoly becomes a lot easier, for example. That's it. All right, guys, we'll leave it there. Have a great rest of your weekend. GARCapitalFX.com. I will be on location on Monday. I'll be out of town. I will bring my laptop. I promise I will not skip any more morning notes or aftermarket recaps. I got you guys, and we'll talk to you guys later. Have a great weekend. Guys, you're going to be fine. I hate to say it, but you're going to be fine. Life is going to be fine. Tomorrow's another day. The sun will rise tomorrow. You don't have to hug your kid a little tighter today. It's not 9/11. It's not a world war. It's just that asset prices fell today. Oh no, the world ended. So don't worry. You'll be okay. Just like I said in March 2020, if you want to look at our videos, it's on a live. March 2020, I said, we're not going to be on the streets fighting for food. COVID will pass. Things will get better. And what happened? It did. It did get better. Do not bet against America. Do not bet against America. Understand that. The American economy is still one of the most resilient entities on this planet that we have ever seen. Understand that. Once you understand that, it's just a game. Have a good one, guys. See you guys later. Enjoy your weekend. We'll catch you guys on Monday. And of course, Twitter. I'm always live blogging, even on the weekends. I love to hear from you guys. Follow us at G.A.R Capital. If you like this video, hit that like button, and more to come. We'll see you guys later. Have a great one, guys.